Being a profitable trader in 2024 is not easy if you don't know how to get funded consistently and get paid out every month. If you are like me, trading ICT concepts like the Judah swing and breaker blocks, making consistent profit, but now those very same strategies are putting your accounts into serious drawdown. And this video is for you. Well, after making over $45,000 in the last 2 months and getting over $1.2 million in prop firm funding, I've discovered the simple 3-step formula to getting profitable in 2024. But the key here is to follow all 3 steps, because if you miss out on any, the whole chain falls apart. And it all starts by understanding how trading strategies actually work. You see, most people play the game of day trading wrong. Many new traders fall into this exact trap when starting out. They basically compare themselves to these absolute douches dressed like SoundCloud rappers or something, and they get tricked into thinking there's some kind of magical, evergreen, ever profitable trading strategy. So unless you're some kind of day trading quantum computer or a magical fortune teller, you're never going to live out to these impossible expectations that you set out for yourself.
That's why it's very important for you to make sure that you rig the game in your favor. And here's the first step to doing just that.
So when we talk about rigging the game in your favor, we're of course going to talk about trading with other people's money. That sounds like something that could really rig the game in your favor. And of course, by that, I'm talking about prop firms. Now, everybody's problem with prop firms is that they can't seem to pass the damn challenge. And right now, I'm going to show you how to pass that challenge very effectively, quickly, but in a safe way. This is just one of 3 different steps that you need to take in order to really rig the odds in your favor and become a profitable trader. If you put each of these steps together, they are unbelievably strong. So make sure that you pay attention to each of these steps. And of course, right at the end, the last step that I'm going to reveal to you is the actual trading strategy that I use. And I'm going to show you that in detail. So make sure you stick around for that. The way that I pass prop firm challenges, in short, is with a technique called dynamic risk management. And what that essentially means is that I'm not risking the same on every single trade. Now, what it is simply put, is that of course we start at 0, right? So when we start at 0, we're going to be risking only 1% starting at 0. Now, once we get to 3%, okay, we're going to then start risking 2%. Okay, only when we get to 3%. Now, this means that when we get to 3%, our progress is hugely increased, okay? And this is when we are risking 1 to 2 risk-reward ratio, okay? Which means that if we are risking $100, we are gaining $200 every time we win, and we are losing $100 every time we lose. And with the current strategy that we have, I have a roughly 68% win rate, and that's with live trade results that I've taken on stream in front of hundreds of people. It's all recorded in the Discord down below. So with the strategy that's only 50% win rate, okay, and bearing in mind I'm getting 68 right now, you would absolutely kill using this strategy, because when you're at 0 to 3, I'm going to have you use 1%, okay? So here we're going to use 1%. Okay, once you get to 3 and above, we're going to use 2%. So essentially what you've got is, once you've had 2 winning trades here, you will be at 4%, and then you can risk 2%. So if you've got 3 winning trades in a row, you can pass. Okay, it just takes 3 trades to pass with this particular strategy. Now, I know exactly what you're going to say. You're going to say, but Ethan, it's so risky to risk 2%. I know. So how can this be safe? Okay, well, because it's dynamic on the way down as well. So if, for instance, you get into a losing streak and you dip 3% and below, if you're in 3% and below drawdown, you're now going to half your risk to 0.5, okay? You're then going to make your risk 0.5%. Anywhere between 0 and 3, you are going to keep it at 1%, okay? So basically, to neaten this up a little bit, Anywhere between -2 and +2, we're sticking with 1% risk, okay? And then if at any point we go past 3, we then double that to 2%, okay? If at any point we go to 3 and below, -3 and below, we half it to 0.5%. So in short, here and here, we have got 1%. And 3 and below, we've got 0.5%. 3 and above, we've got 2%. Now, what this does is on the way down, it controls our downwards exposure for risk. So when we're in 3 and below, we can now slow down when we're on a losing streak. And then when we are starting to recover, we can start to speed up again when we get back into our winning streak, when we are above 3 and when we're above -3. And starting to go to 0. And then when we're really getting into our stride, we can finish the challenge quickly. And I've used this to pass so many different prop challenges. If you really implement this correctly, you will get funded a lot quicker. Okay, so take advantage of this. Now, the next step is getting paid every month. Of course, getting paid every month as a trader is what we want, but it's not the reality of being a trader. There are months that are good months and there are months that are bad months. You're not going to make a profit every single month. So how can I get paid every month as a trader? Well, this is how, by the way, and make sure again to stick around to the end where I show you the strategy that ties all of this together. It's all good and well to know how to risk manage, but what strategy do I actually use? And I'm going to show you that in the last step. So you're almost there. So what we do to get paid every month is to diversify trades with different prop accounts. Now that you know how to get funded with dynamic risk management, okay, you need to diversify between those funded accounts because getting funded, it's doable, but keeping that funded account for a long time is difficult psychologically, and it's difficult when we look at how numbers relate to trading. Because drawdown is a real thing. So how do I minimize drawdown and ensure that I still get paid out every month? Because like I said, drawdown is a real thing. There are some months where you will constantly be in drawdown and it will take you a couple of months to get out of that drawdown. Okay, so let's have a look at how we would do that. Now let's say instead of getting one 200K account, I work on getting 4 50K accounts. Very doable, by the way, and you can do this whether you are trying to get a 50K account, but instead get 4 10K accounts, etc. The sky's the limit, and this helps you psychologically as well anyway. So what you're going to do here, when you get these funded accounts, you're not going to take the same trades across all accounts. So you're not going to take 1% risk across all trades, all accounts with the same trade. You're going to diversify your trades. So on Monday, you're going to take one trade here. Tuesday, you're going to take a separate, different trade here. On Wednesday, you're going to take another trade over here. On Thursday, you're going to take a different trade here. And you're only going to take one trade a day. You're not going to take multiple trades per day. Okay? The reason for that is because, again, the market conditions change day to day. So if it's a ranging day and you take a loss because of ranging market conditions, you can come back tomorrow where the market has maybe aligned more with your strategy. Okay, that is one thing that trading once a day has completely rectified for me. Another thing that trading once a day has rectified for me is the issue of FOMO and greed. Because if I take a winning trade that day, hey, I'm not going to be worried about getting greedy later on, taking another trade and losing everything because I'm only taking one trade a day. Similarly, if I take a loss and I'm trying to recover everything and I've got this idea of revenge trading, well, I can't. I have to come back tomorrow, okay? So that was a game changer for me, and that's why I only take one trade a day. In fact, today, I was done trading within like 15 minutes, and I'll show you that trade that I took on step 3 when I show you the strategy behind this. Now, again, we're going to take different trades every single day on different accounts. And what that means is that If we're in a losing streak, say we take 3 losses in a row, well, each of these accounts is only going to be 1% down. Whereas if we were taking the same trade on all accounts, well, all accounts would be 3% down. So you see, by diversifying your trades across accounts, you are splitting your risk and you are minimizing your downside potential. But here's where it gets very, very, very OP. Understand that when you take a win and your account is up by 1 to 2%, what I want you to do is set that account aside. Let's say it's this account here. We've made $1,000 on this account here, which is 2%. Okay? Only 2%. You're going to put this account aside and wait for payday. That's all you're going to do. And then you're going to continue taking different trades on different accounts every day. Continue that cycle until another account is like, let's say 1% up. So you say you're $500 up on one account, you put that account aside and you wait for payday. Guess what? Now you're guaranteed a payday. It's like Who Wants to Be a Millionaire? When you are on Who Wants to Be a Millionaire, you can put in something called a safety net. This is your safety net, okay? You're walking away and you're walking home with something, whatever happens with the next trade. Okay. And eventually what often happens to me is I end up with 1%, 1 to 2% on each of these accounts. Okay. So let's say we're 500 up here and we're 500 up here. We've had a good month. There was some drawdown, but it was minimized because we're diversifying. Then what you can do is take one of these accounts if you want to be more aggressive and maybe risk 2% per trade on one of the accounts. Bearing full mindedness that you could lose that account, okay, but you know that you've still got the other account that you are definitely taking money away, taking money home for at the end of the month, okay? It's important that you understand that if you want to be aggressive and do this, you can. And that's how I managed to make 10 to 15% on bigger accounts, like I did with AscendX, where I made $26,000 on a 200K account. It was actually $30,000, but after profit split, I got 26K. Okay, that's how I did that because I knew I had money in the bank that I was going to get at the end of the month. So I didn't care what happened to this account. I was more aggressive and I capitalized on the good market conditions. So this is step number 3, the final piece of the puzzle. If you've skipped step 1 and step 2, I'm watching you. Go back, okay? I'm watching you because if you skip those steps, this is not as powerful, okay? All 3 steps on their own are quite valuable, but together they become unbelievably OP, and it gives you the edge. It gives you the unfair advantage to rig the game in your favor. Now, this was a trade that we took today. In fact, I'm going to get the editor to put screenshots of the trades I took on my live account and on my prop funded account, okay? I made $2,500 on my live account, my live actual broker account, and I made $1,500 on my funded prop account with Effexify, okay? All taken live on stream in the Discord below. So join that if you want to trade with me every single day at New York Open. So the strategy happens at 3:30 CAT or Central European Time or 9:30 a.m. Eastern Time in the US. Okay, and you can convert that in Google however you want. I've given you the times, convert it, figure out how that relates to you. So you've basically got 2 time frames, the 5-minute and the 4-hour. We use the 4-hour for a general direction, just so that we have an outline to trade within, okay? So we start on the 4-hour. And again, we only take trades starting at 3:30 CAT, okay, 3:30 p.m. Central African Time for me. Now, I'm only on the charts for 45 minutes to an hour, and today we were done within 15 minutes. Absolutely crazy. I made $4,000 in 15 minutes. Now, I drew out the 4-hour zones, okay? 4-hour zones, simple. Here's a 4-hour zone here. And we've got a zone where price touched multiple times recently over here. Those are the zones that I'm trading in between. I can take trades in between this. I'm not going to take trades into this brick wall, okay? I'm not going to take trades into this brick wall. Simple. As price is in the middle basically here currently, I can take trades in any direction I want to take. Okay, bearing in mind that I want the trade to end by the time we get to the brick walls. Okay, it's that simple. So my direction is confirmed. I can trade in any direction I want because we're in the middle of these two zones. Okay, but I'm also going to be a little bit mindful of this wick here, which is what I marked on as well, and I marked it on stream as well. So I dropped down to the 5 minute real quick, and then we're marking out the range that was created. Now, this was a slightly irregular example because the range had already been created prior to the open, okay? So the open had happened, okay? And it had already broken out of the range prior to the open, okay? So at the open, this was the open candle here. We had already broken out of the zone. So I had drawn up the zone, very clear, very clear range, okay? This is where price was ranging before the open. I'm simply waiting for price to come back, retest the zone, show a sign of hesitation at the zone, like a reaction is going to happen, and then I wait for price to reject, and I get in on that rejection. So basically, all I'm looking for is for price to come back down, start to pause at this area, and start to reject. And then I get in roughly here on the rejection. And in this case, this is what happened. Price came down. Okay, it started to come down after the open quite aggressively, but I started to see that it was starting to hesitate at this area. Again, that doesn't matter. What I'm looking for is when we get to the zone, are we hesitating or are we smashing straight through? So in this case, I used a 20 pip stop loss. I use a 20 to 25 pip stop loss on average, okay? And that's based on the volatility. And as you can see, this 20 pip stop loss does cover quite a lot. It covers at least this gap here as well, which is why I was happy to use it. And as price got to the zone, you can't see it because, again, this is bar replay. You can't see price in real time. But as price got to that zone, it started to hesitate. And that is when I got in, okay? I got in at market execution, and price immediately tapped this and went further, okay? And this is what happens sometimes, but my stop loss was big enough, and we stayed in the trade, okay? And then once price gets to one-to-one risk reward, so what I do is I will measure out one-to-one, and when price pushes past one-to-one, which is it has done in this candle, I will then go break even. And then I'm targeting a 1-to-2. I'm not taking any partials. I'm just waiting for it to hit 1-to-2. It then hit 1-to-2, and it actually started smashing down after this. So again, we've tested this over and over and over. We've got a 68% win rate on all the live trades we've taken in stream for months now. Okay, since the beginning of us live streaming. So this strategy works, and it's gotten me funded a bunch of times, and it's made me a ton of money because I've used all three of these steps. Okay, so that is the system to rig the game in your favor. Use each of these steps together, and you will be successful. Master the strategy, and you're A for away. So that's it for today's video. Make sure to join the Discord below so that you can see me trade live every single day, trading this strategy in front of your very eyes, in front of hundreds of people, and recording the results. I'll see you guys in that Discord. But for now, that's it from me. Cheers, everyone.